The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. My name is Todd Rich. I am from Nadex, and thank you so much for joining us for the first ever Nadex Virtual Education Summit. It's a 2-day educational summit that we're offering online. Today is the basics. You can see the agenda that we've got for today. This session, the basics of binary options. I'll be doing that session here momentarily. The way it's going to work all day is we're going to just go straight through the day. We're going to take 15-minute breaks in between sessions to give everyone an opportunity to maybe freshen up their cup of coffee. I've got a nice hot cup of coffee here in front of me right now. We'll just mute, and then a couple minutes before we start, we'll unmute, we'll get all ready for the next session, and we'll just get going again. I am going to tell you we are recording this, and it will be available on both the Nadex website as well as the Nadex YouTube channel. We're going to break it into 4 separate sessions for the recordings so that it's a little bit more digestible for you. And you can pick just the sessions and you won't have to fast forward and skip sections. And if you ever want to go back and review any one of them. After the basics of binaries, we're going to be doing the basics of knockout options. My colleague Dan Cook is going to do that. And then after we've set a foundation for the 2 really core products that are available at Nadex, and these are really cool trading vehicles, set up in a very defined risk, defined reward environment, tailored to the retail audience to access the markets. Once we give you a solid foundation of those, we've got a great partner, Brian Caprice, who's going to introduce you to technical analysis. Now, something about technical analysis, I think it's an incredible tool whenever you're investing in trading. When you're trading, technical analysis is very helpful. Now, I do have a little bit of an analogy. You do need to know what these different technical indicators are and sort of how they work. But you don't necessarily have to know all the math that goes into how they're created. The analogy I like to use is I can drive a car without understanding the internal workings of a combustion engine. It's cool to know how an internal combustion engine works. If something breaks and isn't working, it would be great to know how to fix it. But if I'm just using it to drive, I know, and there are indicators on your car to help you drive your car. You can use technical analysis and understand what these tools are and how to use these tools without having to fully know all the math necessarily that goes behind it. So great skills that you can learn, and we're introducing you all. This is the day of basics. Now, the last session of the day, I will be coming back, and I would highly encourage you to be there for that one. The first sessions are very much like giving somebody a recipe. The last session is going to be a cooking show. So if someone were to hand you a recipe for how to make braised lamb, that's great. But if you're not really comfortable in the kitchen, but they tell you, here's all the ingredients, how about you show me? My mom was born in Missouri or Missouri. So however you want to pronounce that one. But in Missouri, it's the show me state. So let's show you. And so we're going to actually get into it and show you how to apply and how to understand all the topics and subjects that we've covered for the entire day and bring it together. So I would encourage you to definitely try to be there for that one. And if you miss it, of course, there'll be the recording. I will be putting up a slide just like this in between each session so you know what's coming up, and you can take a step away in between each session, take a peek out the window. I know that's become everyone's favorite pastime as of late, and hopefully sometime soon we can actually go outside. I know that we're all struggling in these difficult times. It hasn't been easy. So with that, the basics of binary options, hopefully I've teed up the day, and also know that tomorrow we're going to be doing advanced topics. So if you haven't registered for that, please, by all means, do so. and you can check out on nadex.com under the webinar section. In fact, I'll probably be able to show that to you in a bit at the end of this session, where you can sign up for tomorrow if you missed that. All right. An introduction to binary options. Again, my name is Todd Rich. I am head of education here at Nadex, and this is an interactive session. I do want you to know I have got a couple of colleagues. In fact, I have our head of service and head of sales, Marcus and Nelson, in the background. Please, in the questions box, if anything is unclear, I go too quickly, or you would like a little bit more follow-up, put in your questions. We will do our best to answer all of your questions. If we somehow miss it, I'll show you how you can reach out to us, because at Nadex, we are here to help you. We want to help you. We want to help you any way we can, and it really does help us help you if you let us know what you need or if you have some further questions. Oops, there we go. Now, before I get into any webinar, and you're going to unfortunately have to see this at every session today.
Hi, Todd.
Yes.
Can you hear me?
Yes,
This
I
is
can.
Marcus. Hey, we're having some people report that they can't hear you. Do you see anything on your end? Take a look at.
No, sometimes we are. Thank you for that. And my audio is definitely working. And if you're having any technical difficulties hearing, sometimes it helps to refresh your browser. This is being delivered over the internet, and unfortunately, the internet isn't always 100%. If you can hear us, if you don't mind typing into the questions that you can hear us, it would be nice. Yeah, see, everyone can hear just fine. I apologize to those who can't hear. This is going to be true all day long. And in fact, thank you for pointing that out at the beginning. I will make note of that at the beginning of every session. Refresh your browser. That will often solve your problem. It may require you just to join us and sign back in. So thank you for that. Unfortunately,
No
when you're delivering it over the internet, sometimes that can happen. So thank you for that, and that's actually good to know for the rest of the day. We will definitely make note of that with all the other sessions. So if for some reason you can't hear me right now, please refresh your browser or log out and join us and come right back in. Thank you. All right, now back to our wonderful disclaimer. This session, as are all of our sessions today, as well as tomorrow, are brought to you by our compliance department. I know, very exciting stuff here, but this is actually very important. Trading does involve risk, and whatever trading you do is solely your responsibility. I am going to be using some real world examples at points throughout the day. We are going to be showing some real products. Nothing that we say today in any of our sessions, or tomorrow for that matter, should ever be construed as a buy or sell recommendation. We are doing this strictly for your education. So it is, please, important to note that. Okay, on with it. What is the agenda for this particular session? And I am going to start off with who is Nadex. I thought that was a good thing to do at the beginning of the Virtual Education Summit, but when we're talking about binary options, it is very important on who Nadex is, and you'll understand why. It is an interesting marketplace when you talk about binary options, and I want to be very clear on who Nadex is and why you would potentially want to trade binaries at Nadex versus any place else in the United States. We are then going to go through what is a binary option. I'm going to define it, some basic terms, and then go through how they work. I mentioned this is defined risk, defined reward. We will definitely explain that. And then understanding the dynamics of binary options, how they're priced. What does that mean? What happens to the price of a binary as events occur in the marketplace, whether the underlying asset moves as time moves forward. I want to go through so that you can get a little bit of a feel for how these are priced and how that price action works. I'll explain how you have a large variety of choices when you want to get into the binary markets, particularly at Nadex. That includes different asset classes, a variety of asset classes. We have binary options for equity indexes. We have them for commodities, gold and oil, very popular. We have them in foreign exchange, the currency pairs. We even have them for events, economic events. So we'll get into all that. And it's not just those, it's the price. It's the time frame for each one of these options. And that also makes a big difference at the end of the session. You'll understand why. And then I know I'll have a couple minutes at the end, or at least I hope I will. And I want to just give you a glimpse, a very brief glimpse of binary options on the Nadex platform. Again, at the end of the day, I am going to be doing a much deeper dive, not just for binaries on the platform, but also for knockout options, as well as technical analysis and charting functionality. So I'm going to be bringing together everything you're going to get today at that last session at the end of the day, but I want to give you a brief peek at what to expect. So let's get into who is Nadex. First up, Nadex stands for North American Derivatives Exchange. Nadex for short. It sounds kind of cooler to say that. North American Derivatives Exchange is quite a mouthful. But this is the biggest reason why I want to emphasize who we are. We are CFTC, that is the Commodities Futures Trading Commission, regulated entity. All right, we are a regulated entity in the United States, regulated by an agency. We are the only operating binary exchange in the United States that is regulated. I know you have access to, or potentially have access to, other binary exchanges that are offshore. They are not regulated, and there can be challenges because they're not regulated, and you can go out and you can learn the hard way, or you can look it up in Google and see what challenges people have when they trade in an unregulated offshore exchange. It might sound really exciting and look really cool, but there are definite differences between what those offshore exchanges offer in a completely unregulated environment versus Nadex, fully regulated. You put your money in, you can definitely get your money back out. All right. We are regulated with the CFTC as both a designated contract market. So when we list any of our products, it goes through the rigorous requirements of the regulator to have a proper product. We also clear all of our products. So we are a derivatives clearing organization. Everything is fully collateralized. I'll explain that. I know that's a buzzword, but there is no counterparty risk to you. Whenever you do a trade, if you make money, you don't have to worry about the other side. We worry about the other side having those funds available to pay you if you have a winning trade. Same being, if you have a losing trade, we're going to hold you accountable for your losing trade, but we are the clearing organization. And what were we designed for? And I intimated this in the introduction, is we've designed very small, easy to understand contracts for individual traders to access the markets in ways that are very low cost and with defined risk reward. And I mentioned fully collateralized contracts, meaning you know exactly what you're getting into when you get into a trade. You are not trading on margin. There is no margin. There'll never be a margin call. There'll never be a need for a margin call. You know what your risk is all the time, right up front. So none of those other concerns, and the fact that they are small and that the cost of getting into or out of a trade is so small, it really is designed for individual traders, smaller traders, to access price action in all these markets and not need a lot of money to do so. And I think that the reason I point this out is I know there are other binary options out there, but none of them are operating and regulated in the United States. We are the only one. Now, what is a binary option? Binary option is a short-term defined risk-reward contract. Okay, that's the long and the short of it. Now, when we say short-term, I will get into defined risk reward. Short term can mean our contracts, our longer contracts go out an entire week. We have contracts that are daily. We have contracts in blocks of hours. And depending upon the product, we have 20-minute binary contracts. And if you want the price action, and I will show you that later because I think it really is a great way to understand how the price on these moves, we have 5-minute binaries on currencies, on FX pairs. So it's a short-term contract. And what is that contract about? It is a prediction, right? Or a statement, but I like to call it a prediction. You can make a prediction, and that prediction has 3 components to it. All right, what is that prediction? And these are the 3 components. There is first an underlying market. As I mentioned, we have binaries in equity indexes, commodities, a foreign exchange, and an event. Let's use, for example, oil, because it's been such a popular moving, and I'm just going to pick a commodity, but it could be the S&P 500, it could be the NASDAQ. You have an underlying market. I'm going to use crude oil. Now, there is a condition, all right, because it's a prediction. It's also known as the strike price, a fancy term, or the level. And then there's an expiration time. Now, the condition is going to be, is the underlying asset going to be above a certain price by a certain time? Will it settle, above a certain price at a certain time? So will oil finish in the next 2 hours above $28 a barrel? That's your prediction. That is a binary. It's pretty straightforward. It's a yes or no thing. We're going to get a little bit more into that in a second. I just want to tee this up. And it doesn't matter whether you're buying it or selling it, your risk and your reward is defined up front, and they are both capped. So you know, again, it is a defined risk reward environment. All right, that is what a binary option is, and it does have a range. Binary options will trade between 0 and 100. And I'm going to get into what those numbers represent in a little bit, but when you look at the price of a binary, the floor is 0, the ceiling is 100, and that is it. And it will trade between that range, okay? And then it will settle at either one of those ends. Now, as I mentioned, it is a statement. It's a true or false prediction. Either the event happens or it doesn't. Will gold finish above $28 a barrel, yes or no? If I think yes, I buy. And if it settles above that level, the option goes to 100. If it doesn't happen, the price of that option will go to 0. That's why it's binary. It's all or nothing. In the end, it either goes to 100, the statement is true, or it goes to 0, the statement is false. Okay? And that's the simplicity of these in a nutshell. Binary, and that's why it's called a binary. It can be one of 2 things. Now, what are these prices? And this is rather important, is the price can, and it actually sort of is, it's the market's price of the probability of the event occurring. Okay, so this is the market. So the marketplace. There are people out there. There are buyers. There are sellers. There are market makers. There are a bunch of different participants in the markets, and collectively, the marketplace, and you are part of that marketplace, help define the probability of that event happening in the end. So, for instance, if oil were trading right at $28 a barrel, and we were looking at the oil finishing above 28 binary, there's a 50-50 chance that it will finish above $28 a barrel. The price of oil, it could go up or it could go down. At that moment in time, the binary option will probably be priced right around 50. Okay? A 50% probability. If oil were trading at 28 and I were looking at the binary for the will it finish above 26, well, it's already $2 in the money, right? It's, hey, is oil going to finish above 26? It's currently trading 28. The probability is probably going to be closer to 80 or maybe even 90% that statement's going to be true. Conversely, if I were predicting that if oil were at 28 and the question were, is oil going to finish above $30 a barrel? Well, if 30's higher, it's got to get up to 30 and get above it in whatever time frame. The probability might only be 20 or 30%. So when you look at the price of a binary, it really is useful to think of it as your prediction. Is this event going to happen, yes or no? And what's the probability of that event occurring? Now, it is also important to note that just like other traditional options, and people ask this all the time and volatility factor into the probability of that event occurring. And I'm going to go through some examples to show you that. So instead of just talking about that esoterically, I'm going to show you how volatility and time could impact the price of the binary option. All right, so I want you to understand how the price of binaries move. And then in the end, I think a practical little glimpse into the markets will help you. It will really solidify that concept. So let's talk about the risk reward and how the math works before we get into those examples. As I mentioned, a binary option trades between 0 and 100. Right? And at Nadex, our binary options are worth, like a one contract is worth $100. All right, pretty straightforward, pretty simple. And that means in the end, since it's a $100 contract, that $100 contract is either going to go and settle at 100 or it's going to settle at 0. Now, what do you have to put up? What is your risk? What is the collateral that you put up if you're going to do a trade? And by the way, you can both buy or sell these. If I think it's going to be true, I buy it. If I think it's going to be false, I can sell it. Now, when you do that, let's take a look at what you're risking and what you have to put up. If you're buying a binary option, the price that you pay for that option, the probability that you're predicting, that will be the dollar amount that you risk. So if I buy a binary option at 40, the market is saying there's a 40% chance that this is going to be true. My risk is $40. All right, I am risking $40. Now, if I think it's going to be false, I don't think this is going to happen, I can sell it at 40. Now, what is my risk? If I sell a contract at 40, it could go to 100, right? The statement becomes true. I was wrong. All right. So if I sell it at 40 and it goes to 100, it settles at 100, my risk is 60. So if I sell a binary at 40, I am risking $60. My collateral will be $60. I am risking 60, but what are my potential rewards? All right, let's balance that out. Now, for a buyer, the maximum reward is 100 because that's where it's going to go to. I think this is going to be true. It goes to 100. My potential profit, my maximum reward is 100 minus what I paid. So let's use that 40 again for an example. If I think it's going to settle at 100, I think it's going to be true. I buy a binary option for 40. I am correct. It goes to 100 and settles at 100. I could potentially make 60. I'm risking $40 to potentially make $60. On the seller, the maximum you can get is what you sold it for. So if I sold a binary at 40, now I know that my max, I had to put $60 up because it could go to 100, but the most I can make is the 40 because it settles at 0. In the end, this contract either goes to 100 or 0, and whether I buy it or sell it, I know exactly up front what I have to put up as collateral, what my risk is, and I know up front what my potential maximum reward is if what I say, what my prediction is true. If I think oil is not going to finish above, so I think that it's going to be false and I sell it, I know what I can make, I know what I can lose. If I think oil is going to be going higher and I buy it, I know what I can make, I know what I can lose. So let's look at an order ticket. I mean, this is kind of practical. This is an example on the NASDAQ. All right, we call it the US 100. That is the NASDAQ, the US Tech 100. That is the NASDAQ 100. And here is your prediction. Will the NASDAQ finish higher than 9460 at 4:15 p.m.? Now you'll notice that this expires in, when I did this one, it had 18 hours left. I think I might have grabbed this one evening and it was a daily contract. So there's 18, it tells you right on top, there's 18 hours left. It also gives you an indicative price. At the moment that I was looking at this order ticket, the NASDAQ was at 94.45. So it was just below the 94.60 level. All right. Because it was just below, notice how the price is just below 50. So the market was giving, here's the range. And really the way that you get a true prediction is you look at the middle of the midpoint between the bid and the ask, and that would actually be 49, roughly 49, because the NASDAQ is currently a little below, the market is pricing this at 49% probability of being true. That's a great way to understand it. So we do have our price here. Now this is important. You don't have to just buy the offer or sell the bid. You're allowed to put an offer in between the market if you like. You may not get filled, but you're allowed to do that. And someone else in the marketplace may trade with you. Okay, things that you're allowed to do. Just want you to know that you don't always have to cross the bid-ask spread. At Nadex, we are a proper exchange with a matching engine. You can post your own liquidity, and if you did that, if you put a 48 bid up right now, for one, if someone wanted to sell it, they'd have to sell it to you. All right, and then we always tell you what your maximum profit and maximum loss are on the trade right up front. If I bought one of these at 48, I think there's a 48% probability of this happening. I do think it's going to go up. I'm buying, so hey, I'm only going to risk $48. If it does not finish above there and it goes to 0, I could lose my 48. If it finishes at 94.61 or 94.60.01 or 94.60.10, it's above, it settles at 100, I make $52. Right? So on your order ticket, you know exactly what am I risking, what's my maximum potential loss, what's my maximum potential profit. And there's a reason why I keep on using maximum potential. We're going to get into that in a bit. Now, let's understand price time and the market. When I say price, I mean price of the underlying. I want to walk through 3 examples so that you can see how the price and the probability pricing of a binary is affected as volatility occurs, as the price of the underlying moves, as well as time moves. Right? And then again, I'm told you I'm going to show you this, and maybe you'll get a glimpse of it in action at the end of this session briefly. I'll definitely do more of that at the last session of the day. Since we know that the price can be thought of as reflecting the probability of an event occurring, it will constantly move. It is not a static number. The probability of something happening, if there's a lot of time, then that's going to give it more time to be true or false. That will be factored into the potential probabilities. If there's a little bit of time, that will also impact it. Okay. Now, here's an example. If the bid ask were 75, 76, and we're just making up numbers, the midpoint on this is 76. That's the market saying there's a 76% chance of this happening. Now, the probabilities do not have to move exactly with the price of the underlying in the market. As the underlying moves, it could affect the probabilities, but there are other factors as well. So it's not going to be a linear relationship as the price moves up and down. The price of the binary doesn't have to always reflect that because there could be other factors in play. But it is important to note that how much time is left and volatility, those two things can impact the price of the binary option, meaning it impacts the probability of that event occurring, of the answer to that being true or false. So I am going to walk through 3 examples right now, one with lots of volatility, and then 2 with very little volatility so that you can get a glimpse. All right, now here's the binary on the euro US dollar. So we picked an FX pair, and the prediction was, will the euro US dollar finish greater than 114 at 3 p.m.? All right, so there is the 114 level across, and we put a chart of the price of the binary option right on top of it. And let's take a look what happened throughout the day and what the price of the binary option, is it going to finish above 114, how that changed throughout the day. So early in the day, when the price of the euro US dollar was above 114, it was pricing the binary, it was giving it a greater than 50% chance of being true. In fact, it was pricing it at 56%. That was the middle of the bid-ask spread. It was saying, yes, there's a 56% chance of this settling at the end of the day above 114. But as time goes forward a little bit, the price of it went down through 114. Notice then that the probabilities on whether this was going to be true or false dropped to 44%. So it went from 56% down to 44% because the price of the underlying, the euro US dollar, dropped below the level. So now at this point in time, there was only a 44%, or the market was pricing it as a 44% chance of finishing above. Now, let's keep it at that price. Notice it went sideways, and we skip ahead in time. Now, you're halfway through the day. Now, the price is roughly where it was earlier in the day, and look what happened to the price of the binary option. The probability dropped from 44% down to 36%. Why did the price drop? The probability dropped because there was less time for this prediction that it would finish above 114 to be true. Okay, so as time went on, the probability of it actually happening started to decay away because now something had to happen in order for this to get above 114. We then saw it rally, and it went above 114. Now, this is very close to where it was earlier in the day when it was a 56% probability. Now, there's a lot less time left in the day. It is well above 114. The market was giving it a 74% chance of being true. So you'll notice how the price of this binary option, it rises and falls as the price of the underlying rises and falls and as time moves forward. When it dropped again below, it gave it a very low probability. Now it's only a 24% probability. All right, very little time left in the day. Not, hey, there's only a 24% chance. You didn't have to, if you still thought it was going to do it, you can get in at a pretty low price. And guess what? It rallied. It did cross through, and it went to 100. Now, if it finishes above 114, it will settle at 100. If it does not settle above 114, so the way it works, if it settles below at 114 or lower, it would be false, right? And it would settle at 0. So what you really end up seeing is you might not see as much price fluctuation or price action as the day goes on. Now that may or may not be important to you because you have your prediction, but towards the end, in the last few minutes, the volatility on price of these can swing pretty dynamically because there's so little time left. And that's what I want you to see. I'm going to show you that. If you're looking for a lot of price action, 5-minute binaries in foreign exchange, that price can move around, and the probability of these being true or false can move very quickly from 20 to 80 to 100, or from 20 to 80 down to 0. So it does get very volatile, towards the end of a contract. Now let's take a look at one where there's a little less volatility, okay? And I just want you to see how time goes on. In this prediction, would it be greater than 114? Here's a chart where it was not volatile at all. And you can really see how it decays away. Early in the day, there was a 44% chance of this happening. As time goes on, the probabilities just drop, and go to 0. So you can see not a lot of price. So time is definitely a factor in how the probabilities for whether this is going to be true or false are impacted. Here's one where it goes sideways. There was a chance, there was a chance, there was a chance, there was a chance. Now there's no chance, and it goes to 0. Right? Now, just know, like we watched where there was a lot of volatility and there was a lot of price action, on the last example, it could go from that 20 to 100 very quickly if it rallied. It can happen. Now I'm going to do the converse of it being below. I just want to show you what would happen. The same would be true for above. All right, so we're predicting it's going to be above. It started out as a 54% probability. We're slightly higher. As time moves on, even though the price may have gone down, right, the price has gone lower, but of the underlying asset. So the euro US dollar has trended a little bit lower, but the price of the binary has actually gone higher, right? Because it's still above 114. There's not a lot of volatility. It is still above there, and now it went from a 54% probability to a 66% probability. Even though the price of the underlying is lower, the probability of it being true is higher because there's less time. As we move closer to time, the probability continues to increase because it's more likely that it's going to be true, meaning it ultimately, and it settles at 100. Remember, it's either 100 or 0 in the end. All right, it's really important to know. That is why it's a binary. It is an all or nothing proposition. And by the way, I'm just going to kind of tee this up briefly. If all or nothing isn't what you're looking for, knockouts are going to be your game. And so I would highly encourage you to stick around for Dan Cook's session that's going to be coming up next. All right, so for each underlying binary, there's a market, there is a time, and there are multiple choices for you to choose from. Okay, so you can pick the level that you want. And sometimes when there's extremely volatile markets, we actually may add strikes on the fly in order to give you some choices and opportunity. So let's actually take a look. Here's the euro US dollar. And here we are, as I mentioned, here's some choices. We've got some hourly ones every couple hours. So there's a 2 hour time frame from 2 to 4, from 3 to 5. So you can pick the window on where you'd like to make your prediction. You can choose daily contracts and what time they expire, and we tell you, here's your choices. There's weekly ones that go out. I believe these get start on a Sunday evening. The week, and you have 6 days out there for you to have a prediction be true or false. When you look at these, okay, so here the euro was right around 107.9, 107.8, 107.79, and if you looked down and you clicked into any one of these, and I'm going to do this briefly before we wrap this session up, you can see the different choices when there was 2 days left, with the euro trading at 107.86. The 105.25 was way below. All right, it was deep in the money. The market was giving this a very high probability of being true, up in the upper 90s. All right, as we went to 107.25, it's 107.25, still below 107.86. More than 50 pips. It's still giving it a high probability, a 70%. Now, if I wanted to choose, I think it's going to keep going higher, 108.25. It is further up. The euro would have to go up to 108.25 and finish above there in 2 days, actually in 3 days, 2 days and 23 hours. The market was pricing it right around a 34% probability, right? And that is right there, right in between. So if you thought it was going to keep going higher, you could, try to buy a 34% probability. Now, this is really important. I've been talking about binaries as though they are all or nothing contracts. All right. But just because, what just happened there? There we go. Just because there's an expiration associated with a contract does not mean you have to wait until expiration to see what happens. So yes, it could be all or nothing, all right? And you can wait for it to be all or nothing, or you can choose to exit a position for a profit or loss before expiration. If I bought one at 40 and it went to 60 and I would just like to take my $20 profit, you can sell it back out and take your $20 profit and not worry about it potentially going to zero. So you can, as you saw, the price of these move throughout the day, you can trade those probabilities throughout the day. You do not have to wait until expiration to see what happens. You can, and it will either go to 0 or 100. But and conversely, if I sold one at 30, I thought there was no way this was going to happen. I'm going to risk $70 to make 30, and it goes at the money 50-50, and it starts going, and I was wrong. I do not have to lose all 70. I can buy it back for a partial loss if I would like to do that, because I decided, oops, I made a mistake. So just because there's an expiration associated with the contract doesn't mean you have to wait to expiration. Now, if you have any questions about what we just talked about, as I mentioned, we are here to help. You can call us. I will put this up throughout the day. You can email us. I hope you've been asking questions in the background. Now, before I call an end to this session and we take a little break, I am going to take 1 or 2 minutes because I mentioned I was going to show you something, and I would very much like to show this to you. And I'm going to do a much deeper dive into this at the end of the day. Oh, by the way, here, I'm on Nadex.com, and if you didn't register for oops, okay. The screen is now paused. Okay, there we go. If you didn't register for tomorrow, you can come for the advanced concepts, and you can take a look at what we've got up there, where we're going to do a much deeper dive into the platform and technical analysis, and actually talk about some different technical analysis and some different trading strategies. The reason I really wanted to come here is I wanted to show you just very quickly, and I am going to use our new Nadex platform, and I am doing this in You know what? I'll just go here. We're going to go to a live environment and we'll just take a look at the prices. I am going to log in and I wanted to look at a binary, and I mentioned that we've got, and I will do a deeper dive into this on all of these, but you want to see price action. I am going to show you our 5-minute binaries. Here's these, they got a few minutes left on these, and let's actually look at the euro US dollar. I am just going to pick one right now and just show you the chart. And I'm actually going to, no, you know what? I think I should be able to zoom in here. Let's make this a 1-minute chart so we can get a look at this a little better. And then I want to spread this out so you can actually see all the different expirations or the different, you'll watch. I mean, this settles in 3 minutes and 25 seconds, and you can actually watch the probabilities on these. It's currently right now above this 109.77 level. If it stays above there, you're going to watch this 70 start going closer to 100 pretty quickly. All right. As it's going higher, notice that, look at this. This one, which was in the 30s just a few seconds ago, as it gets closer and closer to this level, is going to move towards 50-50. I mean, this, you want price action. This is how you can really understand how the price of binaries move. When you can see that this thing is going to settle in less than 3 minutes, is this going to be true or false? As the price of the underlying starts moving around, the price of these binaries, you know, hey, it was just touching this level and it was 50-50. It starts to back off that level a little bit, and we watch it come down. Oh, look at that. And it just popped right through. As it jumped, this was in the 30s when we were first looking at it, and it's now above, it's above 50-50. I wanted you to see that. I will do this again at the end of the day. It's difficult to show you, I mean, to show someone binaries when you're looking at these short-term ones, because the volatility in the price as you approach expiration, remember, this will settle at 0 or 100. These will either be true or these will be false. There is 2 minutes left to find out what's going to happen with this one, and you can trade the price action around these, and it can be pretty volatile going into it, which is a lot of the exciting action that people are looking at for binaries. And again, at Nadex, we are the only operating, fully regulated binary options exchange in the United States. I did go a couple minutes over on this session, but we're going to take a pause now. Let's let everyone take a break, freshen up your coffee, stretch your legs, and hopefully you'll be back at the top of the hour to learn and hear about knockout options from my colleague Dan Cook. All right, I'm going to go on silent for a few. We'll be back in 12 minutes.